behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to a very special buy, hold, sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, who has somehow got himself together today for this show, despite today's sell-off. Look great, Toby. With us today is Sylvia Jablonski. She is a CEO of Defiance ETFs. And Sylvia, welcome back to Buy, Hold, Sell.
Thank you so much. Great to be here with you guys.
Absolutely. Well, listen, we got to talk about the market action today. Gigantic sell-off. You would think the president was here with the amount of media that's been circling around the exchange all day today. I got to ask you, though, you're probably getting some clients, I'm sure they're talking about outflows. Are you seeing any selling increase at Defiance right now?
Well, so interestingly enough, we actually, and this has been true of the last month, and we've really seen, a lot of this volatility in the market, but we actually are net long creations in our funds, which means that assets are coming into our funds. And I think a lot of that is because, investors like stocks that are in correction territory or near correction territory. And some of the things that, we represent tend to be in that AI, quantum computing, tech space. And I think as those names have gotten beaten up, a lot of our clients are actually coming in and they're dip buyers, so we'll see if that holds up. But so far it's been, use of short funds, and it's been dip buying.
Sylvia, the data said that there were no institutional buyers today, but there were retail buyers today. And I think the cool thing about you having a short, ETF as well as a long ETF is that it allows people to do that. They obviously need to be somewhat active and not passive. But what was like the most, bought ETF today?
Oh gosh, I think probably the most bought ETF was a short MicroStrategy ETF today.
I love that one, by the way. I love that.
Yeah,
I love the fact that I can,
and then
I love the fact that I can buy call options on that now.
Yes, you can. It's so the levered inverse ETFs and MicroStrategy have really taken off and gained popularity. And I think you kind of have two things going there, right? You have MicroStrategy, the Bitcoin company, and MicroStrategy, the tech company, and both are not doing well. And so the short fund is doing quite well. But interestingly enough, we're also seeing a good amount of, so we see the trading flow in the short fund, but we saw a good amount of creation activity today in the long fund. So maybe investors are thinking that you might get like a little bounce off of these lows that we're seeing here. And they're short term, right? So the investor just has a view for the next day or two.
You mean an absolute, gigantic, oh my God, Donald Trump woke up this morning and completely changed his mind because he certainly lost his mind yesterday. I have a whole different take on this. And Todd will be really, really shocked. So we've been short going into this. We've been in bonds going into this. But I told my subscribers, I told our investors and our money management clients that I would be hard for me to imagine that Donald Trump would get up in front of this big meeting yesterday and say, we're going 60% tariffs, baby. Screw those people. Let's blow the freaking economy up. Let's blow up globalization. It's all going to be great. And then he did that. And that is blowing the minds of almost every professional I know. We remember, let's not forget, Todd, we had the American exceptionalism trade going on, and man, we're going to be cutting regulations, we're going to be cutting taxes, a lot of merchant acquisitions, stock market goes up 24%. Then he gets elected, then he gets, what's that thing? He gets sworn in. And then 3 days later, it comes out and says, oh, by the way, we're going to cut all this stuff. We're going to, do everything we can to make America great again, and blah, blah, blah. And then he comes out last night and said, oh, by the way, we're on purpose going to tank the economy, and we're on purpose going to tank the stock market so that we can, our trading partners can wake up, and he's just waiting for them to come crawling back. Well, none of them came crawling back, Todd, today.
Right, and we are just one true social post away from turning this whole thing around. So we'll see how it goes. But I think tomorrow we'll actually see some more selling going into the weekend. Sylvia, with your ETFs, so you have a great lineup of ETFs, and we'll talk about the new ones that you have. I know you want to get to those today. But are there any ETFs right now that you would discuss maybe with other clients that could actually be a hedge against all the tariff talk?
Yeah, I think, the ETF that we've seen, and by the way, totally agree. This was very unexpected. We went from like a 15% risk of recession to 45% risk of recession. We went from, positive GDP to perhaps that being wiped out in a quarter, and like nobody knows. Like what do you talk about if you're a corporation during earnings calls this season? Just have no idea how to play this, right?
They're going to blame it on somebody else, trust me.
Yeah, well, they can blame it on somebody else. I guess in a way, it's an easy out. They're just kind of going to say, "I don't know," and we know what the market likes the least, and that's "I don't know." Yeah, so I think in terms of what we've seen and what we've kind of told investors about is XMAG, right? So it's the S&P 500 minus the Mag 7. And if you looked at that performance, I'm just like not even going to talk about today because today is a mess. Yeah. But if you had looked at that performance prior to today, XMAG was outperforming the equal weight S&P 500. It was outperforming the S&P 500. And then if you just like look at the top 7 names of the S&P 500, the Mag 7, as compared to the next 7 names, those next 7 names were up year to date, like the Berkshire Hathaways, the Visas, the MasterCard. Some of these names were having a decent year at least, right? Yeah. And so we were telling a lot of investors, like, you have Mag 7 everywhere. We love Mag 7. We're always going to love Mag 7. Buy it on the dips, put your positions in. But you probably have so much of it that if you put new money to work in the market, maybe it's worth diversifying out into a Mag 7 type of trade. And I do think, like, look, is today the bottom? Who knows? To your point, tomorrow might be worse. Monday might be worse. But eventually it's going to get better, right? And it's hard to call bottoms. And, so you can pick your spots here. But I think maybe X Mag 7 might be a decent place to look for those spots.
Well, Sylvia, I pushed back on that a little bit. I was just thinking about all the crashes I've been in, starting with 1987. And, the government didn't step in then. It was a crazy bond trade go bad. And, we had this big crash. And then it bounced back because people figured out that was a one-off thing. Then we had that little crash in 2000. I don't know if you remember that one. I know you weren't born then. We had MicroStrategy blow up on March 13th while I was skiing in Courchevel, by the way. And I open up my laptop and the whole thing's blown up. Then we, of course, sold a bunch of liar loans and bad mortgages to people, like, 14 million. And then that blew up in 2008. The government always came back in. What's different about this time is that the government caused this crisis. They caused this blow up, and the Fed can't do anything because tariffs are inflationary. We know, we can already, look at the Fed futures. They're only, pricing in one cut. So now we're, I believe the correct term is a shit without a paddle, because we don't. The government's not going to come in. The Fed's not going to come in. The tariffs automatically raise the price and lower the profit margins. And CFOs are sitting there today on their hands, because I know a lot of them, and they're saying, "Holy blank, 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 Toby, what the heck are we going? I'm not going to spend a freaking dime until I understand what's going on here," and multiply that by, 3,000 public companies. So I'm still short, and I'm still in bonds, and I don't see any reason to be buying the dip here.
That being said, a lot of these decisions aren't, reliable per se. Like, is the announcement yesterday and these numbers, like, are they actually reliable for the long term? Is there a chance that, A, he dials it back a little bit, or B, some of these countries actually do capitulate over time? Is there a chance that, Fed goes 3 times or 4 times? I mean, we don't know. And so I get what you're saying. They caused it, but they could fix it. They could fix it.
But we know that the inflation rate is too high for the Fed to do anything right now.
And
we just added 200 basis points of inflation on price inflation. So the Fed can't come in because they have that dual mandate, as you well know. So it's got to be the government to come in. But no, the government is establishing these. And then the idea is that these countries are going to come, pedaling back and say, "Oh, I'm sorry, I didn't mean it." Okay, well, let's negotiate half a bit and let's shake hands. Mexico's not going to do it. Canada's not going to do it. France says supplement. Spain's not doing it. The UK's not doing it, because they feel like they got, blankety blanked by Mr. Trump. And I don't know if you know a lot about European sovereigns and primes, but they're very proud. They don't come back to Donald Trump and kiss his feet like, some of the Howard Lutnicks of the world are doing out here.
So before we go to the break, because I want to get into the new ETFs after the break, but I do have to ask this question, Toby. You saw the email that Dan and I sent to both of us today about stagflation. He's talking about immediate stagflation. Are you of the same opinion?
100%. We talked about it this morning. That's the conundrum here. If you didn't do what they did yesterday, we could make a case that inflation was working down, et cetera, et cetera. But now that you've put the most inflationary thing you could possibly do to an economy into the entire global system, then and then if you look at what the GDP numbers, and I use the Federal Reserve numbers because they've been pretty good on this. They're looking at basically a 3% GDP takeaway, all said and done in this. So we only have a 2.7% growing economy. So take 3% away, then add inflation. That is the ultimate recipe for stagflation, and it's coming.
I like it. I like it. All right.
I don't like it, but that's a fact.
That answers the question. No, you got it. Sylvia, you want to pass on this one, or do you have an opinion?
Yeah, I mean, I would agree with that, but again, I think I'm of the mindset that we've seen a lot of volatility in terms of the decisions that this president makes, and so I don't think anything's written in stone just yet. You have a lot of corporations that have the ear of the president as well. It's not just one and done. I mean, it hasn't been historically, so we'll see. I mean, if the entire economy starts to crash and the market starts to crash, someone's going to care, right?
Would you get Donald Trump on the line? So he'll talk to you. Okay, he won't talk to me.
Well, I'm here at the New York Stock Exchange, and he is not here right now, but I'm sure when he is, Crosscheck Media and Biz Talk Today will be on location. So listen, guys, let's leave it there on
nice
the block.
Plug,
on this
Todd.
block.
Nice plug.
You like that? I know. Well, coming up next, so we're going to be talking all about Sylvia's new ETF. She's got some amazing ones. Actually got a T-shirt to help market the one ETF. I'll tell you all about it after the break. So with us today is Sylvia Jablonski. She is the CEO of Defiance ETFs, and we'll be right back. Please stay with us.
Buy, hold, sell, brought to you by Crosscheck Management.
Welcome back to Buy, Hold, Sell. Well, I'm here today at the New York Stock Exchange. A whole lot of activity. And I got to say, everybody
really?
here is NYSE.
Really, Todd?
Really, I'm telling you. And I got to say, everybody here is gold-plated. Gold-plated service, gold-plated smiles. Everybody is happy despite the big sell-off today. I can't imagine if the markets do the inverse and we're up 1,000 points on the Dow, but we'll see maybe for another time. But with us today, we do have Sylvia Jablonski. She is the CEO of Defiance ETFs. Sylvia, you came out with two stunning ETFs right now, one of which has the ticker symbol ELON, E-L-O-N.
Yes.
Can you tell everybody about this? I have a T-shirt, I'm showing it off, and people are coming up to me, but you're the expert. I think you should explain it.
Yeah, sure. So, this is pre what happened yesterday. Elon was very much the poster child for MAGA. And all things MAGA were very good in November, right? When we heard the election results and going into it, we talked about this a little bit before, right? We're going to have tax cuts and all this kind of stuff. And so Elon was a great name to have, but actually it's more than Elon, right? So what we're trying to do with battle shares is we're trying to pin up the new versus the old, the change of guards, the high tech visionary versus, kind of the old way of doing things perhaps. And what we do is we know that retail investors do pairs trading kind of naturally. Institutions do it a little bit more systematically, where they go long one name that they really believe in and short another name that, that they think
Yep.
will kind of underperform. And so you tend to lever up that long name. And so Elon is essentially, a 2x long. It can drift anywhere from 180 to 220% on the long side of exposure, and then a short of Ford. And the idea here is that Elon is, the future of technology, robo-taxis, self-driving cars, all of these things, solar companies, space, all of it. And Ford, has it's the classic American automobile company, but they don't have their own technology. They don't have their own AI. They kind of they have union issues. They're kind of stuck with the old way of doing things. And eventually, if we care about, climate change and all that kind of stuff, which I know a lot of people debate, but eventually I think younger generations will care more and more, EVs win. And so you're going to kind of benefit from the momentum that Elon has over Ford. And that was the concept.
Well, so you're short Ford and long Elon,
Yeah.
or Tesla. I get that.
Tesla,
But then today happened, or yesterday happened,
Right.
and now if I'm a manufacturer like Ford, and remember that almost 47%, I believe, of the number of their actual vehicles are made in Canada, and about 67% of their parts are now. They're good to be short because their costs are going to go through the roof, and their sales are already in the toy. Elon makes the Teslas here in the United States, so that gives them a benefit. But it's an interesting concept. So is it 50-50 long, short, both of them, or is it more long Tesla and less short Ford?
Yeah, so it's 2x long on Elon Tesla, and then it's an inverse on the Ford. Yeah,
I got it. So one inverse short, 2x long. And
right. So you benefit if you're, if you get momentum on Tesla and you get momentum on being short
I love
Ford.
it. And when does it start trading, or has it already?
This started trading quite a while ago, actually. It's been out for, about a month or so. I mean, the tricky thing about Tesla, right? Like last year it was up 64%. And then, this year it was like at some point 20% off of the lows that we saw on March 13th, but now it's kind of, all this stuff. Like there's a couple things with Elon. Number one is I think he is a proxy for DC, and maybe that's why he's stepping down, who knows? But I think he's getting punished and all these factories are burning and things like that because of politics versus the actual company itself. And then the company itself is deliveries were short of expectations and things like that. But
you mean 40%? You mean 40% short of expectations?
Yeah, something like that. Yeah.
Yes, it was 41% in the United
Right.
States, 39% in Europe, and over 40% in China. So that's not just a little miss there, lady.
Not a little miss. Fair enough. Fair enough. A big, big bomb, right? But I think he kind of foreshadowed a little bit of that. But I think for us, like when you think about these types of pairs trades and momentum, they play out over time. So we don't think that this is going to necessarily play out in the next month. I mean, now who knows what's going to play out in the next month or two, but we think that this is like long term, right? He has the technology, he has the AI. They're going to have new models. The cyber trucks are going to start working. The first self-driving vehicles, he's arguably further along and will be further along than anybody else. He's a guy who can figure it out. So I just think that like long term, it's a good battle that a lot of investors will play. Particularly younger retail investors like this trade. Yeah,
I love the name Battle Funds, Todd. I mean, it's
battle
just
shares,
like
battle share.
Yes.
Battle shares. I'm sorry. Yes, I can think of about 6 different paired trades that would be fun for you to do.
Yeah, we have a lot of good ones. We definitely have a lot of good ones.
I'll send you the winning ones, okay? Not the losing ones.
Okay, fair.
So how have the inflows been on the new ETF?
It's new, so they've been pretty slow, and just admittedly, Tesla hasn't done well, so it's hard to convince people to try this kind of ETF. But I don't say that because there's something wrong with it. I think it's because the investor mentality is often buy high, like we buy when stocks are ripping up, and then all of a sudden we sell when they crash instead of like buying when they crash and whatever. So I do think that once you see investors tiptoeing back into the market, that's a trade that ends up playing out.
Okay. So with that, and I'm sure with all the news with the Teslas and everybody damaging the Teslas, I mean, that's a front page story. That's negative news though, so it must be difficult, I would imagine, for your marketing team to try to separate the two, right?
It is, but I think again, it's one of those things that if you have this opinion, like people are like diehard Tesla fans, right? People who drive
No
Teslas
question
love
about
Teslas.
that.
They're almost there. Yeah. So I feel like this is for the person who has really high conviction in Tesla and Elon and his brain and all that stuff. But I mean, like the caveat there is like some of those people are also not necessarily Republican historically, right? And so I do think that perhaps that trade has some weight because of what's going on in DC. But look, if the tables turn and again, like we somehow come out of this tariff thing alive and things go well, all of a sudden, Trump will look like a hero, Elon will look like a hero, and then the battle forges.
Todd, can you imagine? She's sitting around the desk with her people, and they're saying, "Okay, here's what we're going to do. We're going to create this long 2x long Tesla thing, and we're going to short Ford, and it's just going to be ridiculous.
Oh, the
It'll be good.
reaction.
Yeah,
I
it'll
can't
be. I
imagine.
mean, and then
That's
the
Look,
last 90 days happens.
if this was last year, we'd be sitting here and I'd be like, guys, we have the ETF that hit $1 billion in the last 6
Right,
months.
exactly.
Yeah, like
I'm just saying,
yeah.
it's like that old movie, missed it by that much,
Right.
That's awesome. All right, so let's go to the next one. I saw the press release about it. Toby, I think this is right up your alley here. This is an income fund, but it's based off of what the GLD is doing. The symbol's GLDY. Can you get into this a little bit, Sylvia?
Sure. And this one's pretty simple. So interestingly enough, we have this group of clients that really love these income products that we have. So the original products were QQQY,
I'm one.
Toby's
you're one of them.
we
talked about this before, right? People like getting this regular income, and we had launched the oil one, and that was kind of doing, prior to oil crashing again, but like that was doing pretty well. And so we kept getting asked for this one. A lot of investors were like, gold is crushing it. Why don't you get one of these income funds out with gold? So you get the some of the upside performance up to the strike of GLD plus whatever income you get from the at the money or slightly in the money put selling that we do. And the idea is that these will generate these higher types of dividends. And, it's hard to kind of target what that is, but like in the 20-30% range is kind of what we've been seeing on back tests. And so you get GLD performance and you get that 30%, annualized dividend on these things. And so,
Sylvia, so my question is always this, because I keep trying to figure your stuff out. So the percentage of you actually own like 75 or 80% are just T-bills, right? They're just
no, that's just what the file looks like ahead of, because basically these are 0 DTE, right? Or they're
so every day you're selling the
so you're seeing that number, and then it gets deployed the next day back into the positions.
Okay,
so it's just the timing of the report.
I was very confused by that. All right,
you're not
selling
paying for
these
turkeys.
0-day put options.
Yes.
And while gold was going up, they would expire, and you kept all the premium, which makes you look quite smart. Now we hit 3,500. We're long gold. At some point, there's going to be some profit taking here on gold, since it's by far outperformed everything else going on. When it starts to pull back, just a normal correction, do you start selling call options as it's coming back, short-term 1 days?
No, we stick with the strategy, and in a way you're hedged there, right? Because if GLD starts falling, you're still getting that income every day, so it's going to fall a little bit less. It's kind of hedged in that way. So we kind of let it be what it is. It'll, if GLD starts to rip, on the other hand, like if it's up 30%, we're not going to capture all of that, right? We're only going to get up to the strike. But you tend to, with these products, you tend to get that like steady performance profile. Hedged on the downside, you capture a good amount of the upside, and it's really the income that you're doing it for. So income and diversification.
Sure. Is it weekly or a monthly income? What's the?
Yeah, monthly.
Yeah. Okay.
Yeah.
Well, I will look at it again. We've been long the GDXU, which is not an income play, but it's the junior miners, and that's, people keep asking, did you put me in the God stock GDXU? No, dear. It's an ETF. I assume we're going to have some gold pullback, but again, given what's just happened, you couldn't create a better scenario for price
Yeah.
appreciation in gold, because it really is a safe place in the storm. So once again, you're right on the trend, girl.
Toby,
Thank you.
explain that for the audience a little bit, though, Toby, on why do you think gold is going to pull back? I mean, you would think during days like today, I know gold pulled back today, but you would think it would be more in favor.
Well, I mean, there's two fundamental reasons why gold prices, bullion's going up. Number one is a whole bunch of gold got moved from Europe to the United States because they were afraid that they were going to have tariffs on the gold. And by the way, they were right. They're would have tariffs on gold sales, right? Then the second thing was that the central banks, because of the dollar weakening, were buying gold to build up their reserves. And the fact of the matter is, there's sort of X amount of gold available in a bullion sense in Europe and the United States, and there's more buyers than sellers. So obviously that's why the price has been strong. And then everybody's been waiting for tariffs. They didn't, who knew it was going to go this way, but it was a precaution. So it sort of made all the menu items, Todd, that institutional and pension funds wanted. And then when it started doing well, the gold bugs started buying it at the retail level. So I just say, in other words, normally when you get a run like this in any commodity that's not energy oriented, then you get a healthy pullback where people are taking profits, and then new buyers are getting a chance to get it at a lower price. So I'm not saying it ain't going to crash, Todd. Sylvia, it's not going to crash.
Well, Sylvia, with that though, we've had more people on Buy, Hold, Sell and the other shows on BTT that have been very pro gold, much more so than we've had in years past. I'd imagine there's an appetite for this ETF that you guys just launched. But I mean, what are the clients saying? I mean, are you seeing big inflows right away on this, or is it going to take time, just like the ELON?
I mean, it's so hard because we literally just launched the ETF. It's been out for 24 hours.
What's the 50-day moving average? You got the 50-day moving average?
Yeah,
It's your fault, damn it. The gold went down today, then, Sylvia.
Yeah. This is like brand spanking new. So it's really hard to, we actually had 3 ETF launches in the last couple of days.
Oh, wow.
And it's, you can't time this stuff, right? It takes time to get things out into the market. But it's the tariff thing yesterday was not fun.
Sylvia, call me next time you're launching another ETF, would you?
Back up. You'll let me know if there's a storm coming.
You had GLDY, and then you had 2 more?
Yeah, well, one of them is doing great. So the other one is a short super micro, SMCZ, which that's doing great out of the gate. That has some nice volume. It's a short fund, so that's like along with short super, short micro strategy. It's another good one. So that one's great, right? Like right away, you get a lot of retail and hedge fund guys in there. And then Rigetti was the other one. So we have ION.
Rigetti
we're big on quantum,
Computing.
Yeah, like one of our biggest ETFs is quantum. We have this one beta ETF that's been around for since 2018, before anybody knew what quantum was. We had that ETF, and that ETF is just like really taken off. And so we launched an IonQ 2x IonQ 2x Rigetti, and so that is not going to be a happy trade today or tomorrow probably, but yeah, I mean, it's something that the market really wanted. So hopefully when things stabilize, you start to see flows in there. But the short fund is doing great. I mean, diversification, right? XMAG and the short fund are like the two that people care about the most.
Sure. Well, I'm still amazed by, Todd, the number that the top 10 stocks by market cap in the S&P 500 are in a bear market, and they represent 60% of the total market cap. So we're in a stealth bear market for the S&P because of that huge, market cap weight. And then being X, it was brilliant, Sylvia, because a lot of people like me were like, dude, if I wanted to own those things, I would just buy those things. But you can't do an S&P 500 fund for, an investment client, who can't stand the pain. So I love that fund. We have that fund in a couple of our accounts.
So how many ETFs do clients currently offer? I mean, every time we have you on the show, you're talking about a few.
Yeah, we're pretty close to 30. We're pretty close to 30. We have a couple more that we're coming out with in the next month or two. So we'll definitely hit that, hit that number.
Okay.
I mean, we've definitely paid our dues. Like we launched and then COVID came and then, 2022
Oh, I
came
know,
and
I know. I
we're very
remember it.
much tech and quantum. And now here we are, so we're definitely like, getting some experience with volatility in markets and stuff like that. But it's good because we kind of learn what investors want in different types of market environments, and we're starting to put some of that stuff out there. So it's
All
great.
right, well, here's my idea for your next one.
Let's hear it.
Oh, boy.
Tariff beneficiaries. Because
Yes.
we went long this morning, Mexico, we went long, a variety of tariff beneficiaries, and it's a little esoteric to figure it out.
Yeah.
But Mexico is going to be the primary beneficiary here, and there's some actual Mexican publicly traded companies. You could put together a very slick one.
I love it.
Yeah, there's definitely some ideas out there.
Yeah.
Todd, she's
Put it in the
telling me to
suggestion
shut up
box,
and not.
Toby.
I know.
She's telling me to
Avocados
shut
and
up. I get it.
Target,
Okay.
right?
We
So,
need a tour of Defiance headquarters, and I'm sure there's a suggestion box for you. So
Awesome. We love suggestions. We love suggestions. So
there you go. Absolutely.
everyone's sitting on the next big thing.
yes.
Yeah, of course. Well, I think you're onto a couple of those big things right now. That's for sure. But I can tell you, for the audience and everyone who's listening to this throughout all of our audio podcast partners, just simply go to the description. We'll have all the symbols and links and everything for you. So very easy to find all these ETFs. So Sylvia, I got to thank you for joining us. We got to have you back. I have you here at the exchange. We got to talk.
I know. We have to do it next time.
Todd, just have her in 3 months. She'll have like 12 new funds. So I mean,
yeah. If the market turns, if not, we'll be like, what happened?
You're saying your hair's not going to be blonde, it's going to be gray after?
It might be. I feel it as we're speaking, turning,
Well, the ship has sailed for me, okay, Sylvia, so it is what it is.
Then I'll join you, we'll be twins.
Well, coming up tomorrow on Wealthwise, we have Sam Stovall as the featured guest. On Money Mavericks on Tuesday, Jay Hatfield. And a week after, Katie Stockton is going to sit down for an exclusive with Tobin on Money Mavericks. So a lot to look forward to with Crosscheck Media and Biz Talk Today TV. And a special thanks also to the New York Stock Exchange for giving us the opportunity, especially on a day like today. It was chaotic. I can't express it.
They're never going to invite us back, Todd. They're never going to invite us back.
I got it. Next time I'm bringing donuts, that's for sure. So on behalf of Sylvia Jablonski and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Cheers.
All right.
Buy, Hold, Sell, brought to you by Crosscheck Management.